Hi, I'm Ray from W Consulting. I'm here to talk to you about the amendments that were made to IAS 19 on employee benefits. The amendments were made in June of 2011, and the reason why it was necessary to go back and amend IAS 19 was to ensure that the financial statements that are prepared by reporters provide investors and other users with a clear picture of an entity's commitments resulting from defined benefit plans. The key issue that we've had has been the deferred recognition of any gains and losses arising on defined benefit plans, and the difficulty that we've also had in assessing performance of an organization as a whole when it comes to accounting for these gains and losses. The amendments that have been made to IAS 19 deal with three specific areas: recognition of any transactions that are undertaken, presentation of those transactions, and the disclosure of those transactions in a set of financial statements. We will deal with each of these areas in turn. On the recognition side of things, the amendment eliminates the option to defer the recognition of gains and losses that result from defined benefit plans over a period of time. In terms of the old IAS 19, we could apply what we call the corridor approach and recognize gains and losses over a period of time, depending on what the formula that we applied actually threw back at us. There was no requirement to recognize any gains and losses immediately in your income statement or in other comprehensive income. Now, the result of all of this, you might have had a situation where you had a pension fund that had a big deficit on its books, and you were required to go and fund that deficit. The obligation that you had was not shown in your books immediately. So essentially, the numbers that are then shown in your company financial statements and what that are shown in the pension fund financial statements will not talk to each other at all. This then leads us into the second bit, the presentation. How do we present all these numbers? What choices did we have? In terms of the old IAS 19, we had an option to present any gains and losses that result through other comprehensive income or through profit and loss. Because it was an accounting policy choice, it therefore then made it very difficult to compare one organization against another. So essentially what we had now was a situation where we were recognizing any gains and losses over a period of time and then deciding where exactly we're going to show them. Well, going forward, these two issues are resolved in that any gains and losses are recognized immediately, and they'll be recognized immediately through other comprehensive income. That then leads us through to the last section of the amendments that have been made. The previous disclosures that we had were quite voluminous. We had a lot of information there, and some of it, whether or not it made sense, well, that can be argued. The improvements that have now been made will essentially address, first of all, the characteristics of the defined benefit plans that we've got. We'll be required to go and show a lot more information about the defined benefit plans and any risks that arise from the defined benefit plan. All these changes are effective for periods beginning on or after 1 January 2013. Early application is permitted, but where you do early apply it, you have to go and apply the standard fully retrospectively and disclose this to us in your financial statements.